Yeah, I'm losing my
Hey,
edge.
let's talk a little bit about small trades for volatile markets. Everything here at the exchange is a small trade for the most part, relative to the existing world of futures. But I want to talk about small trades in terms of the size of our products relative to your Nasdaqs and your, your gold futures and everything else. Those contracts all being, $100,000 to $200,000 products, everything here at the small exchange being small. But I also want to just talk about the idea of small short-term trades as well, because we have here four products that are none of which at a price extreme. And I think a price extreme really drives a lot of interest and trade idea generation. If a stock market is at all-time highs or lows for the last couple of years, a lot of people have more opinions on where that market is going. And you've got SM75 and Sticks, Pete, both a couple of dollars off of their highs, but we don't throw our hands up and just say there's nothing to trade, right?
Oh, no, absolutely not. And I think we go back to this, and from experience, we've learned, and we've talked previously about treasury notes having basically today a down day, but really what was the tradable range?
Yeah.
7 ticks. Now, that's about $100, but trying to sift through 7 unique price points and find the right two is really an impossible task. So you look at the movement and say, well, there should have been more to be had out of this. And there isn't. So what we want to do is find enough unique price points so we do get that back and forth, but at the same time, be able to control the amount of randomness and exposure within it. So I think that's what really fits nicely with all of these products, is that you do get the choice of enough. Obviously, some days net change is going to be zero, but honestly, and I think you did some interesting research on this a little while ago, even on those net unchanged days, there's enough price points on either side of it. Maybe not for our one standard deviation scalpable range we talk about, but enough interesting price points that give you entry levels that create trade opportunity.
Yeah, absolutely, Pete. You talk about interest rates or currency products, existing interest rate and currency products on a day like today that, are showing 5, 10, 20 unique price levels to get in or out of positions on. And that's just not a lot. And some people would say, well, this isn't an interesting market. The high is 55. It's only at 51. So it's not expensive enough for me to sell it. The low is at 30. It's obviously not cheap enough for me to buy it. But what's nice is on the day-to-day side of this, you're seeing $1, $2 moves in SM75 and Sticks. Like you look at these moves here in the last month of trading where we've been in this no man's land of not highs and not lows. And Pete, this is more volatile than actually July and August, where you're seeing larger moves in here. And you'll see here that we're rating how many dollars this market closed up or down, green and red here. And each of those dollars, you've got plenty of occurrences that the market closed down $1 or $1.50 or even close to $2. Here on the upside, you've got plenty of moves up $1, and that's 100 price points there. And it's something that you and I look at constantly with these small exchange products because they're so well designed that we'll get on to metals and currencies here in a second. That looking for that 100 ticks higher or 100 ticks lower, or a little bit of give and take around that, depending on how aggressive you want to get. That's a lot of unique price levels to, markets down $1. I can trade, 50 different price levels around that, as opposed to, like you said, today in treasury notes, they're down, 3.5 ticks there, which is 7 unique price points. How do you really have to buy the low and then sell a bounce of 2 or 3 ticks? It's not really an active trade, but these $1 to $1.50 moves that we're seeing in SM75 and Sticks, giving you plenty of those unique price points and manageable size too. These small intraday trades where it's like all right, I'm going to buy this market down $1. I'm going to risk 50 cents on either side of it. And that's my trade for a market that's not at an extreme.
Yeah, absolutely. And that's, you know what, we want to complement tradable opportunity. I think that's what that's what I really like what this shows is the ability to I don't know if we call them inside days or days that don't reach necessarily that scalping range, but still we want to have an engagement around, maybe we have a bias and that extension doesn't meet the full scalping range, but it lets us employ our bias. Like the SPRE being up, say we like $1 on either side for the scalp, but our bias is short and we're up 70 cents. That may be a point where I'm willing to forego the statistical extra 30 cents to achieve the trade location or bias I want. You know what, you need to have, you can't rely on either getting if you were up 70 cents and it moved in 10-point increments, you were having to rely on selling that one tick or selling one tick below it. Otherwise, you miss the opportunity. So the unique price points, I think, are critical for day-to-day price engagement. And you know what, what's great is if that $30 isn't enough, you can certainly scale that up or scale that down. But it's the number of price points for me that lead to the opportunity. Because my inclination always is to, depending on the size of product you're trading, it's scale in. I never am committed that the location I pick is optimal. But once in a while, you'll throw the dart and pin it perfectly. You can never count on that.
Sure.
I like the ability to choose a number of locations when I have an opinion, and that's what this product gives you, which I don't think we highlighted. You don't find a lot of times, and it's challenging. So this is something that really, you know what, affords us that, and we keep going back to this, and I don't think we can emphasize this enough in terms of, you know, the only way we're going to build strategy and then build mechanics is have the opportunity to implement them. And here's a great starting point to do that without being overwhelmed.
Yeah, absolutely, Pete. You raise a lot of good points here because, you know, with SPRE yesterday at $75, we look for that dollar higher or lower. We got $1 lower today, and maybe there's some opportunity around that. But yeah, it gives you these two things. It gives you small size because each of those 100 unique price points between being up or down $1 in any of these small markets is just one notional $1 here, which is really nice because you look at, you know, the gold futures or the silver futures, and the tick increments in gold there are dimes and they each equate to $10. If I'm a small trader who's looking for, you know, volatile markets like we've seen in metals, and I see that, okay, moves in dimes, each dime is $10 and it moves on average, you know, a lot of dimes per day, then I only can really trade a couple of those price levels. So it's teaming the idea of a bunch of unique price levels with something that's small enough to let people like you and me either get one contract going or scale into a position. And yeah, you've got SPRE well off of those highs of August. You know, if you went away from this market after mid-August and said there's no opportunity, you've missed a lot, because aside from this big sell-off that we saw 2 weeks ago here, it's been big down day, big up day, big down day, big up day, down day, up day, down day. And we see it even yesterday, SPRE up $1.25. Today, it down 90 cents. It's been great opportunity here ever since, you know, of course, everybody wants this big move. They wanted to be short going into the $7 down move in SPRE, or what did it equate to, like $60 lower or whatever in gold futures, whatever it was. Everybody wants to be there for these outlier moves, but look at how many moves we've seen in the last month here, all coming in similar to these stock markets. Around $1 to $2 is what we look for. A bunch of dollar plus moves, Pete, that aren't going to break your bank if they move a little bit past you, and also let you scale in at a ton of different unique price levels.
Right, absolutely. And you know what, it's funny because it's not funny, but it's interesting. We built these products to be simple, and they are. And you just went through 3 different products and eliminated any confusion around what this visual speaks to in terms of how many dollars it is, how many ticks it is, and that universe is equivalent across three distinct products: equities, metals, and FX. And that, you know what, the adoption of the levels and stuff and getting comfortable with it is part of the process. But the simplicity of, you know what, the power of moving through three distinct asset classes to find tradable opportunities is really amazing. Because while we can look at the world of equities, and now we're seeing a little bit of correction in tech versus oil and some of those things that have been so beat up, we knew it was inevitable, but the timing of it was challenging. Here, you truly are able to move through three very different things to find three different tradable opportunities in a very easy way. There is no translation of, well, what does the -1 mean in this versus the -1 in the other, or 100 in this, 100 in that. And you know what? I think that will, as people start to explore and feel this indifference around, you know what, if it's a dollar trade or a metals trade, I may have a bias, but as I run through the opportunities, I'm going to find an opportunity every single day in these. And I'm going to understand that in terms of scope. That's really powerful.
Yeah, I totally agree. Once again, you know, here in US dollar, just similar story, just different time frame here from SPRE and from SM75, where you've got these outlier moves once again that come along once or twice every year that everybody wants to be there for. You know, it was March in stocks, it was last month, maybe August, September in metals, and it was back March and April in currencies. But all of these markets now, in my mind, showing greater opportunity in that they're not seeing outlier moves. They're just seeing decent movement. Like, look at the movement here in currencies prior to March and April. There's nothing to do when you're hugging unchanged every day. Since then, though, you've got these 50-cent dollar moves on either side in the SFX market. In the SFX market, and it's this, like you said, Pete, it's the same as our metals market here, and it's the same as SM75 and sticks, the stock markets, just looking for, you know, not this price extreme that we've got in recent months that you're going to see once or twice a year, but looking for these small trades in volatile markets using the smalls. All these markets showing volatilities that are not near their lows, a lot of back and forth. But if you're looking for the price extreme, you've got no trade opportunities in any of these asset classes, but you look for these small trades in stocks, metals, and US dollar, you've got plenty of opportunity.